Welcome, everybody. Hello, my name is Willem Lombard. I'm the Managing Director of Tax Risk Underwriting Managers. Thank you for joining us today in this session. We're quite a big group today, which is nice. A special thank you to Greatsoft for arranging this for us. Greatsoft Tax Product Manager, Zandre van Rooyen, is here with us today, and she'll be available to field any questions you might have on Greatsoft-related questions. Also, welcome to Byron Watts. He'll be pressing the buttons for us today, and he'll chat to you about upcoming live events later on in the session. Also like to welcome for the first time members of the Institute for Accounting and Commerce. Welcome to everybody who's joined us for the first time. We try to do these webinars regularly, and I hope you find some value out of it. Then also, of course, welcome to some of the clients of Tax Risk Underwriting Managers. Thank you for all you that joins us today. There are some insurance brokers on this call this morning, so thank you for that. The session will be 1.5 hours long. There will be time for questions and answers after the main presentations. And I ask that you please put your questions in the chat box so that we can keep an eye on those questions and then field them perhaps as we go, but probably we'll collate them and field those questions at the end of the main presentations. The session is being recorded, and it will be made available on our website, www.taxrisk.co.za, a few days after this event. So please give some time, and then we'll inform you when it's live. As with your CPD certificates for the tax practitioners here today, there are CPD certificates available, which will be issued to you also in a few days' time after this event. This session doesn't carry CPD for insurance. It only carries CPD credits for tax practitioners. Right, that's it for the administration part of it. Without further ado, I'd like to introduce our keynote speaker for today. Dr. Daniel Erasmus is a leading tax attorney and a professor of international tax law at the Thomas Jefferson School of Law in San Diego. He is a South African and US tax court practitioner and widely recognized for his work in tax risk management, domestic and international tax, and transfer pricing. He has published and co-authored several textbooks, as well as his doctorate thesis, Information Gathering Powers of SARS and Audits and the Constitution. There's none more qualified to talk about today's subject, which is dealing with SARS verification audits and the quick revised assessment issued by SARS. Thank you, Daniel, for your time today, and over to you.
Thank you very much, Willem, and good afternoon to all of you. Willem, just I meant to tell you this. I'm now an adjunct professor at Middlesex University in London, but everything else is the same. So, okay. But I still do teach. I'm speaking to you all from Colorado, which has had a terrible winter season with very little snow. And believe it or not, it is coming down in buckets outside. So there you have it, a bit late for the ski season. Today's talk, as Willem said, is on a particularly important subject, something which is oftentimes misunderstood and one of the more dangerous stages in interactions that you will have with SARS. And that is the verification audit. And of course, all of you have at some point, and probably right now, are facing verification audits all the time for your clients. And you probably would have seen that there's been an uptick in the verification audits from SARS. And that's largely as a result of, you would have read in the papers and on the web that SARS is increasingly using artificial intelligence to assist them in identifying taxpayers for verification and then full-blown SARS tax audit purposes. But all of this starts with the verification audit. And the typical sort of AI processes that are being used and that you would have seen is the classic example is they extract information from the bank accounts of the taxpayer and then they tally that up and compare it to the tax returns that have been submitted. And if there's a discrepancy, they then want you to explain what that discrepancy is, and there it starts. It becomes a lot more sophisticated. We've been involved in certain matters where, of course, SARS, through the information exchange agreements that it has with many, many, many foreign countries, they're able to take the names of the entities or the parties that are shareholders or trustees or even beneficiaries, and they're able to then use artificial intelligence to access any information that has been dumped into the SARS database, and then align with those names and the information that is available to SARS. They're then able to draw on this information. And of course, the AI system, which is an AI system, it's a computer system, then reaches certain conclusions. And then what we're faced with is all of these verification audits that commence. Now, I'll sort of dive into that aspect of it a little later in my talk. So most practitioners will treat the verification audit process as merely an administrative step in their interactions with SARS. And this is where the danger comes in. It is not. It is the point at which litigation risk is created without them telling you this. And if you get it wrong at this stage, it's not going to be easy to fix it in the objection or appeal stage. And that will become clear as to what I mean by that. So what I'm saying to you is, at this point, most of you are looking at this as an administrative step, and yep, it's a pain in the butt, and you're having to now upload a bunch of information by virtue of e-filing, and you're seeing it as an administrative step. It is not. It, in essence, is the creation or the start of potential litigation, which I'm going to illustrate to you in a minute. What SARS does is, based on the information which you give them, many of you would have experienced that without any further communication, you will receive revised assessments. That's it. Nothing else is exchanged. They would have asked you for the information. There might have been additional information that they've asked for, but they do not respond in any other manner whatsoever other than to now notify you that there's been a revised assessment and the revised assessments are issued. And let me point out, those of you who've attended my lectures before or other subject matters that I've spoken about, I've spoken at length about this particular problem. These quick revised assessments are unlawful. And that is why I say there's a real risk at this particular point in your interactions with SARS that you are, in fact, entering into a litigation process with them, because they are going to issue or have, or most likely will issue, these very quick revised assessments. And of course, what is the next thing that most of you do? Most of you now look at this and get back to your client and say, okay, now we've got to go the objection and appeal process. And so that whole process commences. But what you have failed to recognize, many of you, is that the step taken by SARS at this juncture is unlawful. And I'm going to show you why. Now, we've got to first and foremost try and determine what is a verification audit. Now, if we look at Section 40 of the Tax Administration Act, SARS may randomly, they say randomly, select a taxpayer for inspection, verification, or audit. It does not define a verification audit. That remains undefined. And if you go and look at the definitions of the Tax Administration Act, you're not going to find a definition. The first place that you will see any sort of writing or legal related writing that is binding on all of us is in a very recent case, and that is the case of United Manganese, Kalahari Pty Limited, and a string of other taxpayers versus SARS, which ended up in the Constitutional Court. And I'm going to come back to that. I'm going to come back to that decision because I want to take you through key elements of it. And that decision made it clear that, repeated what I've just told you, that there is no definition of verification. And in my view, the absence of such a definition creates a tremendous amount of flexibility for SARS. And with that, a tremendous amount of risk for taxpayers, because now you fall into this gray area of, okay, is this a verification, or is this now a fully fledged SARS audit? At what point does it become a fully fledged SARS audit? And if it's a fully fledged SARS audit, we know that SARS have to take certain steps. Well, but if it's still a verification, then sometimes SARS turns around and says, yes, but in the case of a verification, we don't have to do anything more than what we're already doing by way of asking you for this information and taking the necessary steps, which in their view includes the issuing of this revised assessment. But they are wrong. Now, what the verification is supposed to be is an informal review of the information of the taxpayer based on whatever risk analysis SARS has done. And it's meant to be something for them to determine whether any further steps should be taken. In other words, whether or not the verification should now become a fully fledged tax audit as we would normally understand it. And in a fully fledged tax audit, you would then expect SARS to abide by the rules, and that is to issue a letter of findings in terms of Section 42 and do what is required in terms of the Tax Administration Act. But there are no safeguards, there are no procedures, there's no guidance given as to what procedures or what steps are to be taken in this verification process. And so all of you are kind of left in the dark because, once again, I talk about this gray area that you're in. Are we in a verification or are we in a tax audit? And at what point does that switch take place? Now, the problem with this is that, SARS is going to request a series of documentation. Usually, it could be an extensive list of documentation, depending on what the nature of the verification audit is. And you can be rest assured from the experience that you've had in the past that they are going to form conclusions based on what you've sent to them. And based on those conclusions, they are in many instances going to simply say, right, there's a discrepancy here. According to our findings, there is a gap, and they are going to raise these revised assessments. And the moment they do that, the moment they raise that revised assessment, the taxpayer is a material adjustment is being made to the taxpayer's taxable income in the year in question, or in respect of whatever VAT return the taxpayer has submitted. And the moment that any material change happens vis-a-vis the position of the taxpayer, they, SARS, are duty-bound in terms of Section 42 of the Tax Administration Act to issue their findings, in other words, set out the grounds of assessment that they propose entering into before they do so. So that's what I refer to as the letter of findings. They are supposed to then, the moment they see that there's a gap, and the moment they decide they want to take this next step, which they typically do, and issue the revised assessment, they then become duty-bound to issue a letter of findings first. And when they issue the letter of findings first, and where one is required, the taxpayer is given by law, and this is a very important step that they're not allowed to skip, the issuing of the letter of findings. But the next step, they're also not allowed to skip, except in very rare circumstances where it's a sense of an emergency and the taxpayer is about to disappear. They have to give the taxpayer the opportunity to respond to that letter of findings before the revised assessment takes place. This is where there is abuse on the part of SARS, because they are simply collapsing by issuing these revised assessments quickly. They're collapsing what should be just a verification process. They're collapsing it into a fully fledged audit and simply then issuing the assessment all in one step, missing this very important step that needs to take place. And I'm emphasizing and drumming this into you because it's a frequent problem I see over and over and over again with many tax practitioners. Now, looking at what SARS is entitled to do, as I've mentioned before, Section 40, the selection process. Section 46, you've all dealt with this before. SARS is entitled to ask for information and whatever is foreseeably relevant, which is a very broad term. And they're also, in certain instances, entitled to request that you attend them in person with the information that they want to verify or audit, as the case may be. In most instances with the verification, they're simply going to have asked you for that information. And then in rare instances, Section 63 deals with search and seizure procedures, which is beyond the scope of my talk today. But nevertheless, if we look at those first provisions, 40, 46, and 47, these are tremendous powers that SARS has. And as I've explained to taxpayers and to tax practitioners in the past, it's one of those rare situations in our law where the taxpayer is obligated and mandated to make available self-incriminating evidence. What I mean by that is you have to share with SARS anything relating to your tax affairs, and you can't hold back on anything. And if you hold back on anything, then there are criminal sanctions that they can impose against you in terms of Section 240 of the Tax Administration Act and in terms of various other provisions. So from a constitutional point of view, you are being compelled to give what could be potentially self-incriminating evidence. And some of you tax practitioners will have experienced this when you've seen an audit convert from what we call a civil audit, civil meaning versus criminal, a civil audit becoming a criminal audit, and they then start pursuing your clients or members or directors or officers of the company with criminal proceedings. The moment that happens, there is another set of rules that come into play, which again is a discussion for another day. But because this is such an enormous encroachment on taxpayers' rights, SARS is duty bound not to make the information that you have been compelled to give to them, starting with this verification process. They're not allowed to make that information available to the criminal investigation section. There has to be this Chinese wall between the two because of this transgression of a fundamental constitutional right that you have. So in the past, when I've represented clients that have faced this difficulty, again, you must understand that your tax auditors have not always been well trained. And as we see with them missing the letter of findings in the verification audit process, which now has in fact become a fully fledged SARS tax audit, the moment they want to make a material change to the tax affairs of the taxpayer, they're unaware of that. Can you imagine how unaware they are of this particular point that I'm making to you, that the civil information that you've been compelled to give cannot simply just be handed over to the Criminal Investigations Division of SARS. That's why there are search and seizure warrants, and that's why if you look at the normal criminal procedure provisions in our law, as it is in most other countries that have a constitution, if you're wanting to obtain incriminating evidence from any person that the state wants to pursue criminally, they have to issue a search and seizure warrant for the purposes of doing so that has to be signed off by a judge. Whereas here, you are compelled to give that information. And so there the guarantee comes in. They cannot just hand that over to the criminal prosecutions. And so what typically happens in those cases, and I'll give you the bottom line answer, is we make the appropriate application to have all of that evidence removed so that the criminal investigations can't rely on what you've been compelled to give to them, because you've had to give them everything to try and prove to them that whatever they're investigating, there's no underlying problem, and that you have managed to report all the information required for the purposes of determining the taxes payable by you. All right, so when we get to the provisions of Section 40, they're entitled to any relevant material, and all of these terms are very important to where I'm leading to. It's very wide in scope, and I've mentioned to you anything that is foreseeably relevant. So what tax practitioners tend to do at this particular point, they may end up making available too much information. And remember, all that SARS is going to do is whatever you dump on them, they're simply going to take that information and they're going to feed it into the AI system that they're working with. And lo and behold, you are simply going to end up creating more problems than are necessary for you to have to deal with when it comes to the position of your particular client. So I want you to, for a moment, think about what it is that you should give SARS. And in this regard, my advice to all tax practitioners and taxpayers, the moment the verification audit starts, you are communicating with them by virtue of e-filing. The moment that starts, it is imperative that you upload an engagement letter via the e-filing portal with SARS. Now that letter is very important in that it will do the following things. It should define the scope of the audit. And if the scope of the audit is extremely wide and it's not clear from their notification what the scope is, there is nothing wrong with you asking them, could you be a little bit more specific about what the scope of the audit is? Because what they've asked is extremely wide. Could we focus on a particular aspect that they have a concern, understanding that they can always broaden their information request, but for the purposes of honing in and narrowing down the scope of the audit, that you ask them precisely what the audit is about. And could we maybe work with a sample as opposed to simply making available years and years of information, propose to them a sample. And in many instances, they're quite happy to do so. Secondly, you would reserve all your rights, or that of the taxpayer. And I'll come to the most important right there is the fourth bullet point on my slide. Now, of course, in doing this, you're controlling communication with SARS. And in many instances, you are controlling the audit itself. And I'm going to illustrate with a real example of a very large audit that I was involved in some years ago. And I'll come to that example in a minute. In this engagement letter, you will remind them that this is a verification audit, and should SARS wish to take any corrective steps against the taxpayer, they are duty bound in terms of Section 42 of the Tax Administration Act to issue a letter of findings setting out the facts and the supporting law that they rely upon in proposing to raise a revised assessment, to which you, the taxpayer or your client, have the opportunity to respond in full. So that goes into this letter. And it's important you do so at this point, because you're not just responding, you are now effectively documenting what could be a potential incorrect or unlawful move by SARS by warning them that they are duty bound. You're not telling them anything other than what's already in the Act. You're just making sure that they understand that they are duty bound to take these steps to issue you with that letter of findings. Now, part of our presentation this morning, apart from you obtaining CPD points and more importantly, learning from what I'm trying to convey to all of you to really help you in your practice and to assist you in your taxpayer clients, part of this morning's or this afternoon's offering is taxrisk.co.za has an insurance policy that covers all your fees and any additional professional fees that are required for the purposes of doing all of this immediately after a verification audit goes wrong. And I'll come back to that point. And I just wanted to mention those who do decide to sign up on a policy through an introduction by Willem when he speaks to you later on. This engagement letter is something that I will most definitely be sending to you, and it's a very important letter, as I've mentioned, that needs to be done at the point of the verification audit. Now, let me give you the example. So we did all of the things that are on the slide in front of you. In the initial exchanges with SARS, we were very cooperative. We did not come across in any way arrogant. We took the stance that we would like to be able to give them all the information they require, but because the scope is so very wide, could we please find some sort of agreement as to specifically what they're looking for? We will give them that information, and if needs be, the audit can expand. And we then set certain parameters. This was for a mining company, and was in respect of, they were concerned about certain write-offs that were being taken in respect of capital equipment. And we were able to specify then what the scope of that audit was. We then obtained all the relevant information, made sure that there were no discrepancies. We were giving them precisely what we needed to give them to convince them that whatever allowances had been claimed by the entity were correct, and that information was submitted. Now, some of you may have experienced this oftentimes. You don't hear a word from SARS after that. Now, once again, going back to Section 42, SARS are duty bound to keep you up to date with your audit. So they have to periodically let you know what their position is and where they are with the audit, and keep you appraised. If you go and look at Section 42, you'll see that the section actually starts off in that manner. We heard nothing. Literally about 10 days prior to the years in question prescribing, SARS haphazardly, realizing, because in our scope engagement letter, we had reminded them that they're duty bound to issue a letter of findings, haphazardly issued a general letter of findings. What I mean by general, they did not address the specific scope of the audit that we'd agreed upon. To which we responded to say, if they don't issue us with a specific letter of findings to the scope of the audit, the letter of findings, which they've now issued, in fact, remains unlawful because it doesn't address what the scope of the audit is. and they did nothing. So we launched an urgent application because we knew SARS was about to issue revised assessments. And they capitulated, and eventually the Sunday, the application was to be heard on the Monday in the High Court. The Sunday evening, I was called into a telephone meeting with the SARS officials, or the litigation division of SARS in that particular instance, and they realized that they were in the wrong, and kudos to them for doing so, and asked us please not to proceed. They would withdraw the letter of findings immediately, to which I said, that's fine, but we are going to go to court tomorrow, and not to argue, but we will have the matter withdrawn, but we will have it made an order of court that SARS is officially withdrawing the letter of findings, which is exactly what happened. The next day, the matter prescribed. That was the end of that audit. That was the end of any opportunity for SARS to then re-audit that period, unless, of course, they were able to make a finding of any misrepresentation, fraud, or otherwise. The potential revised assessments, if I remember correctly, were well in excess of R1 billion. So I just want to give you an idea. I mean, this was a very big matter for SARS, and they backed off. Now, over and above that, if I recall correctly, ITC 1921 is the first case that I argued before the courts, a tax court case in Port Elizabeth. That was probably about 8 years ago, and representing a farmer who was also the former CFO of a very large company. They were tackling him on certain farming deductions that he was trying to claim and had disallowed them. But importantly, when I was brought into the case and reviewed the pleadings, the Rule 31 and the Rule 32, I noticed there was no letter of findings. So I said to the attorney on record, we need to proceed in court, bring what we call an in limine application, and we need to have the entire assessment declared unlawful and set aside, which means we don't even have to get involved in the merits of the case. We don't have to call him as a witness and prove that he had in fact incurred all these farming expenses. And that's exactly what we did. We started the case off by saying to the court that SARS has failed to comply with this peremptory provision and failed to issue the letter of findings. And so the assessment was set aside. That was the end of the matter. It was won. Now, that particular matter was dealt with in the tax court because it was already now set down for trial, and I brought it as this preliminary application prior to us now actually proceeding with the merits of the trial. Now, the law has become somewhat more complicated since then, and I'm going to revisit this. So I don't want to create the wrong impression now telling you that this is an opportunity for you to deal with this once the matter goes to trial. You want to be able to deal with this well in advance, long before you have to start incurring the inconvenience and the expenditure of drawing up pleadings to go to a tax trial, which takes an enormous amount of preparation. So we'll come back to that particular point. So when you provide the information, you need to ask yourselves, you know, what, sorry, I see there's a spelling mistake here. What was the trigger for this particular scope? And you can ask them this information in the process. So when you send this letter of engagement, it typically would also contain a series of questions. You know, can we please, as I've mentioned, agree on the scope? What was the trigger for you deciding to audit this particular or commence with a verification of this particular client? What were the risk indicators? Now, and was AI used? And if so, what was relied upon? SARS has to justify their process. Now, in many instances, they'll turn around and say, well, you know, a lot of this information is subject to secrecy because we're not. And there is a provision in the Tax Administration Act to say, in the interest of, you know, fair administration across the board, they're not at liberty to share some of this information with you. I find it quite interesting because in the United States of America, the IRS consistently publishes risk review reports for different industries, explaining in those reports typically what are the risk factors that they've identified and what are the things that they look at, again, to try and streamline the audit process that takes place. I would still ask SARS the question and see if certainly towards the point of trying to limit the scope of your particular audit. Now, when it comes to AI being used in these audits, as I mentioned earlier, you'll see that oftentimes it will be bank statements now being compared to tax returns, and then records obtained from third-party sources. AI, as you may know, often hallucinates and can make a lot of mistakes. So unless you know the subject matter of what you are putting in your prompts to the AI process that you are using, you will oftentimes be given input from the language model that is incorrect, and they call it AI hallucinations. So if you don't know the subject matter well, you won't be able to identify those problems or those mistakes. And that's exactly what happens in the AI processes that SARS follows. So there's nothing wrong with asking them to what extent AI has been used and to what extent has the AI been checked to ensure that the information or the conclusions that it is drawing is correct, and having some sort of understanding as to what AI or what processes have been used, what was sort of fed into their system in order for them to have come to this risk conclusion and now decided to select your client for verification purposes. They're using data analytics, they're using algorithmic risk scoring processes and pattern detection. Again, there's nothing wrong with you asking more information about that. And if anything, they may not want to share that with you, but certainly it will help push them in a direction of narrowing down the scope of that particular audit. So the big question in your minds: when does verification become a SARS tax audit? Because that is when the Section 42 letter of findings should be triggered. In my view, the moment SARS goes beyond processing the information that you gave them via e-filing, the moment they now decide to question that, they haven't even taken the next step of issuing an assessment. The moment they take the moment they decide to question any of that information by now requesting further information, the potential arises that the verification audit has become a tax audit. And at that point, there is no reason why you cannot now ask SARS, is this still a verification audit, or has this now become a tax audit? Again, reminding them that whatever they decide to do that may materially affect the tax position of the taxpayer, the moment they make that decision, the moment they identify that, it most definitely becomes a fully fledged SARS tax audit. And when that happens, they are duty bound now to comply with the provisions of Section 42. So let me just repeat that to make it very clear. You've given them information. They've come back to ask for more information or for further clarification. At each point through the e-filing process, you've reminded them If they decide to take any corrective measures against the taxpayer, it means the verification has become a fully fledged SARS tax audit, and the provisions of Section 42 come into play. And you need to put that to them in the e-filing process where you engage with them by way of correspondence. So any corrective measures, which typically would mean that they are now going to adjust the taxes payable by the taxpayer, whether it be VAT or income tax. Customs and excise is not governed by the same rules. Interestingly enough, there has been legislation in play for many years. They just never promulgated it. But certainly for VAT and income tax, the moment that happens, the moment they take a decision to adjust the taxes payable by the taxpayer in respect of what they're auditing, it becomes a fully fledged tax audit. And they're duty bound to issue this letter of findings in terms of Section 42, and then to give you the opportunity to respond. Now, as I've mentioned, this is where SARS likes to bypass it because it loves this confusion. Well, we're still busy with the verification. Well, there's nowhere in the Act does it entitle them to simply hop, skip, and jump over these provisions because it's a verification. The reason why Section 42 exists definitively puts an end to that problem. The reason why Section 42 exists, it gives air to the audi alteram partem principle of law. The party must be heard, or each party must be heard. And it's a fundamental principle in our Constitution. And if the state fails to adhere to that fundamental right, the conduct that they perform becomes immediately unlawful. Okay, so now it's labeled as unlawful, and that's why. So it doesn't matter whether they call it verification. If they deny to you that it's not a SARS tax audit, it's still a verification, it doesn't matter. They have to give you an opportunity to be heard based on the findings that they have made. They cannot skip over that step. It's a fundamental flaw. Now it's if they skip over that, then and they issue the assessments unlawfully, the legal attack begins. Now, I want to take you, apart from what I've just explained to you as the audi alteram partem rule, here is the United Manganese of Kalahari Pty Limited and others versus SARS, constitutional court case. It was handed down in the course of last year, 2025. At paragraph 8 of the judgment, by a very well-known judge based out of Cape Town, Rogers, who used to be senior counsel, and his practice was primarily tax work, so very well schooled in this area of law. But remember, the Constitutional Court, I think it's 11 judges. I speak under correction because I work in different jurisdictions, but a lot of judges sit on the bench. Before making an assessment, SARS may follow a process of information gathering as regulated by Chapter 5 of the Tax Administration Act. More particularly, SARS may, in terms of Section 40, select a taxpayer for inspection, verification, or audit. The process of verification is not further regulated by the TAA. The remainder of Chapter 5 deals with procedures for audits and criminal investigations. If a taxpayer is selected for audit, the taxpayer must be given a notice of commencement of the audit and a progress report. In terms of Section 42(2)(b), if the audit or criminal investigation has identified potential adjustments of a material nature, that's where I say, if they're going to take corrective steps by altering the amount of tax payable by the taxpayer, that is a potential adjustment of material nature, SARS must, within a prescribed time, provide a taxpayer with a document containing the outcome of the audit, including the grounds for the proposed assessment or decision referred to in Section 104(2), then Section 42.3 entitles a taxpayer to respond in writing within a prescribed time. If an assessment is thereafter issued, Section 96 requires the grounds of assessment to be stated. So there it is. The judge clearly sets out in the Constitutional Court judgment, and in fact, later on in the judgment, which deals with many elements, and I'm going to come back to parts of it, actually considers a position where the SARS fails to issue a letter of findings and the procedures that must then be followed, and that's where it becomes a little tricky. But as you can see, this is where the real litigation starts, long before you've actually issued, long before you've done an objection or appeal. This is where you need to take the next step, because by simply identifying what SARS has done as being unlawful, that is not sufficient. That's not sufficient. You have to stand on those rights and you have to act on them, which means you need to take certain legal steps. So those immediate steps that are required, I'm going to take you through those, but I want to just remind you, and this is where Willem comes in later, this is specifically where the taxrisk.co insurance policy, which incidentally starts, I think, at 265 Rand a month. I mean, it's a ridiculous sum of money for a premium. Immediately, that specialized legal expertise is then cemented with you as the tax practitioner to assist your taxpayer client in overcoming this hurdle. And the policy pays for your fees and any fees that would then be payable for the likes of myself to come on board and assist in now dealing with the unlawful step taken by SARS very early on in this particular matter. And what it requires, the first step, if SARS has now issued this revised assessment unlawfully, the first step is that one must give SARS notice under Section 11 of the Tax Administration Act. And 11.4 says, unless the court otherwise directs, so if there are very exceptional circumstances, no legal proceedings may be instituted in the High Court against the Commissioner unless the applicant has given the Commissioner written notice of at least 1 week of the applicant's intention to institute the legal proceedings. Sub 5 says the notice or process by which the legal proceedings referred to above are instituted must be served at the address specified by the Commissioner by public notice. So that is the litigation division of SARS. So typically this Section 11 notice would be uploaded by e-filing, but that would not be regarded as sufficient notice to SARS. You have to actually send that Section 11 notice, has to be sent to the litigation department of SARS based in Pretoria, and that is by way of notice in a public notice. And that is typically where your specialized legal team will become involved in ensuring that this first step is taken. Now, in my experience, if that notice has been properly drawn up and proper notice has been given to the SARS litigation department, SARS oftentimes, because now it's out of the hands of the assessors, it now goes to the litigation department. And once they start looking at the mistakes made by SARS, what will typically happen is they will be inclined to withdraw the assessment. Now, that, of course, doesn't mean it is the end of the road, because you would then still be able to demand a letter of findings, and then you'd be given the opportunity to respond. And so the matter goes back on track, and hopefully the tax audit will reach finality by you now having been given an opportunity to respond in a letter of findings, convincing them that a revised assessment is not required. If that doesn't happen, if they don't withdraw the assessment at that point, then the next step needs to be taken. And now the question arises, do you pursue the matter in the tax court, or do you pursue the matter in the High Court? And most tax practitioners, unless you are sort of a qualified lawyer practicing in this particular area of litigation, will find this a very treacherous area to navigate. And so it would be quite important to enlist the expertise of a legal team that knows what they're doing. Because typically this type of application would be brought in the High Court, because you're not dealing with the merits of the dispute. What you are dealing with, a legality issue. The fact that SARS has embarked upon conduct that is unlawful, that is unconstitutional, that ignores what we call a peremptory, a binding provision in the Tax Administration Act, and therefore the High Court is seasoned, as has been explained in the Kalahari judgment I referred to, is the proper court of law in which that type of issue is to be decided upon in the High Court. So we go back to Section 11. You have to give notification in terms of Section 11 if you want to go to the High Court. But there's a further problem. Before you go to the High Court, you have to jump through another hurdle in the Tax Administration Act. And they've now amended Section 105 to say that you also have to obtain the High Court's permission, that you are bringing this application before them and you're not taking it to the tax court. So you would now have to explain to the High Court why you're bringing this matter to their attention and you're not taking it to the tax court. And of course, would it be because you, as the High Court, are seasoned with all the powers that are given by the Constitution to a court of law, which incidentally the tax court is not. It falls slightly short of a court of law. And if you want to read more about that, that is set out very nicely in the Kalahari judgment that I referred to. And so, but you have to jump through that 105 hoop. So if you have not had any litigation training and you do not have High Court appearance experience, this is, in reality, this is not something that the average tax practitioner is going to deal with. Once again, I defer to Willem and taxrisk.coza. The policy immediately provides the funding for the professional fees that need to be paid for that assistance that you will require to help your taxpayer client navigate through this sort of complex process. It's a pain. It's a pain. I know. I wish we could just simply go to objection and appeal, which most of us are comfortable doing. Even there's certain steps that you need to be careful of. There's a lot of procedural elements that you were not trained in when you were trained as tax practitioners. But be that as it may, that's where we stand, and we're trying to give you all the assistance that we can through this training, and then also the facility that's available to you and your clients. Now, jumping back to verification audits, at the time that starts, you are potentially facing administrative law issues, such as SARS issuing this revised assessment unlawfully. So it's important that you're alive to the litigation strategy, as I've pointed out to you in the course of my talk, and that you are aware of these procedural defects that SARS makes. Now, my final message on this particular point is you taking control early on in the process. From the point that you issue the letter of engagement, you're taking control. You're reminding SARS what they are duty-bound to perform. And if they fail to do so, you know exactly what next steps to take. When it comes to the actual interaction with them in that engagement letter, ask questions, try and narrow down the scope of the audit. It is so important to do that. And please please, please, please consider the cover that is offered to you by taxrisk.co.za. I cannot overemphasize that. It will really make your lives a lot easier. And I've said to Willem and their team that verification audits themselves are not covered because that's normally just giving SARS information. But the moment, as I said, that information goes awry and you now suspect that SARS is going to take steps further and they haven't responded to your request to acknowledge that they're not taking further steps, typically that would signify the commencement of the tax audit. And had you taken out the policy beforehand, you would immediately be covered. All right, I want to stop there. It's I'm an hour into my presentation, and I think now is probably a good time to take some questions, and then I can sort of hone in on anything that some of the delegates are asking. So Willem, I'm going to ask you to do what we normally do, and if you could read to me any questions.
Thank you, Daniel. Yes, of course. I think so. I'll scan through the questions because I think a lot of the earlier questions have been dealt with in the presentation. Andrew asks the section 42 letter of findings. Does this also cover customs and excise audit dispute processes as well? I think you've mentioned that in your.
So I want to just clarify. I want to clarify something there. Thank you for that question. It actually leads into something really important. Those of you who deal with customs and excise will oftentimes see that wrapped into the customs and excise dispute is the underpayment of VAT. And what SARS typically does is they issue you with their formal notifications under the Customs and Excise Act, but they do not comply with the requirements of the Tax Administration Act, which governs VAT. Hence, their assessment is unlawful insofar as it deals with VAT. I have such a very case that I'm going to court and arguing on the 5th of August. The Section 96 of the Tax Administration Act has very specific elements in it. A, B, C, D, F, G. There's 6 items. The 6th, and then there's a 7th item too. The 6th item, G, is they must, in that notification, tell the taxpayer that he's entitled to object and appeal. Now, in the customs and excise notification they give you, they don't. They refer you to their administrative processes. They say nothing about the VAT processes. Hence, that is not a lawful assessment by SARS. It's unlawful for VAT purposes. It might be lawful for customs and excise, but we all know that customs and excise gets dealt with separately. The 7th element is, because VAT doesn't require you to submit a return like an income tax return, SARS is duty-bound to set out the grounds of their assessment. And oftentimes, the way in which they couch the Customs and Excise Act notifications, they haven't complied with that element. So there are 2 of the 7 peremptory elements that do not appear. And it makes that assessment then unlawful for the purposes of VAT. So please, those of you who are working in customs and excise, please be aware of that. So Willem will tell you the policy doesn't cover customs and excise audits at this point, but it does cover the VAT. So if you are predominantly dealing with customs and excise, you would have the policy for your clients anyway, because there's always going to be a VAT element. And to the extent that there's a VAT element, you are fully covered. And the likes of myself can then be switched on to come and assist you in dealing with that particular issue. So if any of you are dealing with that problem, please reach out to Willem. I'd be more than happy to assist you in that regard. It's just one of these really tacky oversights by SARS. Again, just taking advantage of them being ignorant and taking advantage of the fact that a lot of tax practitioners are not aware of these nuanced points. As we are not, I mean, these things come to light because I'm actively involved in specialized tax litigation day in and day out. And so this is not something that's going to pop out of a textbook. You're not going to find this in a textbook anywhere. So yeah, thank you for that question. A great opportunity to give you some guidance there.
Thank you, Daniel. Sibongile asks, I'd be interested to hear what is deemed as outrageous in terms of the length of time an audit should take. For example, I have an audit commenced in November 23, and it is still ongoing. We received a letter of findings in December 2025 and responded on the findings and USP, but still no feedback. Just wondering when do something and what exactly is available to tax practitioners.
Right. So what you need to do is you need to look at the Tax Administration Act tax court rules. If SARS fails to adhere to timelines, there are rules around about Rule 52 that deal with an application that can be brought to the tax court, compelling them to adhere to their timelines. And if they don't adhere to their timelines, typically, and again, I speak under correction, a default judgment can be obtained against them, in which case the whole matter can be killed there and then. So as to what is unreasonable, certainly what you're telling me sounds unreasonable. I mean, it's but you wouldn't have to find that definition. You would simply launch an application under the tax court rules, and either they will comply or they won't. Sometimes they don't. You know, the matter I just mentioned about customs and excise, SARS is in default of submitting their Rule 33. We were supposed to have a pre-trial conference yesterday. There was just nothing, no confirmation, no attempt to reach out to us. We then got this paltry excuse that they have issues with their phone lines and internet, believe it or not. You know, you may find that we kill the matter quickly. So hopefully that answers that question.
Mariska also offers a remedy. She says we follow the SARS complaint process and escalated to the tax ombud when audits and verifications exceed the turnaround times. It's proven very effective.
Okay, good. That's good to know, because at one stage I was a little skeptical about, but there have been changes in the ombud's position, and so that's good to know. Thank you for that.
Case asks, is a SARS response to a request for information a replacement of the letter of findings?
So you're saying if SARS now has issued a letter of findings, you respond and they ask for more information, it's not a replacement, but it certainly entitles you to a further letter of findings. So if they've done that, so if that that information, additional information, has now emanated post your response, you would write back to SARS and say, right, here's the information. We would require you to please amend your letter of findings or inform us of whatever basis you intend proceeding with, and give us an opportunity to respond.
Thank you.
That's something that a lot of people forget about, by the way. A lot of people don't do that. So very important question. Absolutely. If they're asking more information after the letter of findings, it means you're probably on the right track. They need to let you know what they intend doing if anything has changed, and give you an opportunity to respond.
Right. Warren asks, I have to read this carefully to understand. Would you upload the engagement letter where the verification documents are normally uploaded without uploading the actual documents that would upload for verification? With other words, a two-step process. So he's asking, do you upload the engagement letter before you upload the documents?
Yeah, I would upload the engagement letter in immediate response. Normally, when they ask for verification, they give you a time period. The first thing I would do is I would immediately acknowledge a receipt and then upload the engagement letter, setting the necessary points out, and then I would follow that within the timelines required, the documentation. But remember, I've said to you, if the scope is exceptionally wide, you know, then ask them for ask them to narrow down the scope, or ask them to be more specific. And in that respect, ask them for an extension of time within which to submit your documentation, because you're waiting for their response. So that might even then be a three-step process by way of e-filing.
Rocco asks a follow-up question, and follow above question, will SARS open another link to upload the actual documents afterwards? I'm not too sure on e-filing if that works that way.
Yeah, unfortunately, or fortunately, I don't work with e-filing, so that's something you would have to ask within your organizations. I know that there are many e-filing procedural issues. If somebody has an answer to that, I certainly don't. I don't work with e-filing. I normally just tell whoever the tax practitioner is, this is what's got to be uploaded to e-filing as well. So sorry, can't answer that question.
Singbogile asks, is an email to say there are no further queries sufficient, or should one insist on a letter on the SARS letterhead to say that there are no audit findings to be on the safe side? Sometimes no response. This email one-liner is provided, which seems to leave the door open.
So, so as long as you know the email came from SARS, and I would respond to that then to say, thank you for your email. We understand this to mean that you that in terms of Section 42, that there has been no finding and that the verification or audit has come to an end, and have that at the ready. Because if they then take another step and they haven't issued a letter of findings, you've got a nice flow of documentation, which is always nice to put that before a court if we're going to have this knocked over. But there's no specific format. They just simply have to keep you informed as to the process of the audit and at completion whether they are going to take further steps or not. But that sort of one-liner email, the verification letters that you get, the formal verification, and sometimes they issue them by mistake. So what happens is you get a no further action letter, and then they issue the revised assessment anyway. It's bizarre. Yeah, so that's what I would do.
Thank you. Yep. There's a question here. We'd also like to know if you simply upload the engagement letter initially. Okay, so it's the same question. Thank you for that. So Dylan asked, one of the first requests from SARS, especially on the VAT verification, is a detailed explanation of the nature of the business, including terms of payment arrangements with customers, etc., etc. What is the reasonable response to this, taking into account the client does not always have the cash flow to wait for a long procedure to take place?
So you need to answer these questions fully. I'm not so sure why there's a cash flow issue with the client, unless I'm not, the client needs to explain to you to be able to upload to e-filing precisely what they do and how they operate. And I know it's a pain. It's a time-consuming process, and it's not your fault that SARS has decided to commence with a verification, but client can help itself by providing as much of that type of information for you to simply copy and paste after you've checked it. But you need to answer these questions fully. You can't turn around and say, client, we're not really in a position to answer this properly because client doesn't really have the funds to pay us to do so. That's unfortunately not an excuse. And once again, I mentioned to you the more expensive time comes in if those initial questions are not properly dealt with, or SARS ignores the steps, and then the revised assessments take place. There, for instance, for a very small monthly premium, everything from then on forward is covered. But if you put in the engagement letter, you are aware of what needs to be done, you answer, try and reduce the scope of the audit. If to say, if it's a very broad scope, to say, look, the client is a very small organization, they don't have a lot of staff available to to upload all this information. Could we please agree on a sample that you would initially look at, and if you want to expand on that, we're happy to expand on it. Something along those lines. But other than that, I'm not sure what else to suggest.
Thank you. I think one final question before I get into the presentation. I think this is relevant to the subject of what the tax risk insurance policy will do for these verifications. It comes from North Coast Accountants. He or she says, trust tax returns. SARS issued an additional ITA 34 in August last year. ITA 34 stated that if we do not agree with the assessment, we need to support supporting documentations. We sent through documentations in September last year, still no response. We are now getting final demands for the debt of this additional ITA 34. What do we do? So I think this is a great introduction to the presentation to follow.
Yeah, so you know, again, the IT 34 is unlawful. And what should have been done is a court application. Well, the first thing that should be done is a Section 11 notice should be sent off. So, you know, maybe if that person wants to reach out to me via you, Willem, I can, you know, kind of in an exceptional case here, try and assist that person with the Section 11 notification, because that might just get SARS to back off. But certainly the IT 34 is unlawful. And let me just make this point. It's no use that you sit around waiting. The problem with unlawfulness and claiming your rights, you need to act quickly, typically within 6 months. So the rule of thumb is, if you haven't done something within 180 days, well, firstly, hopefully you would have objected, because the objection time has probably come and gone. But apart from that, if you're wanting to bring an application to the High Court, you've typically got to do so within 180 days, which is 6 months, unless you've got very good excuses for not doing so. But be that as it may, let's see if we can assist this person. I mean, that's just a most unfortunate situation to be in.
Yeah. All right, I'm going to share my screen. Daniel, just let me know if you can see my presentation at your end.
Yes.
I need to flip a screen around here. So thank you for that, Daniel. If we have time at the end of the session, we'll deal with a few more questions. But I think it's appropriate for me to tell the audience now what this tax risk insurance is all about. Some of you have already seen this presentation, but we have an additional sort of angle to this as far as the verification is concerned, which I'd like to share with the audience. But for those who haven't seen the presentation before, this is effectively what tax risk insurance is. I'll read you the definition. It's effective insurance against SARS tax audits and related disputes. If an individual, a business, or a trust is selected for audit by SARS, or if there's a dispute about an unfair tax assessment in terms of which SARS is demanding additional taxes, then tax risk insurance will appoint and pay for the team of tax professionals to deal with the matter to ensure a fair and favorable tax audit and dispute outcome. So it's a very simple value proposition. And the reason why it's becoming more and more important is because yes, the tax practitioner is feeling the pressure in your office for the following reason. So this graph here shows you the economic growth in South Africa over the last few years, which has, generally speaking, been less than 1%. And one would then automatically assume that the amount of taxes that SARS is able to collect out of a fairly stagnant economy is going to be similar. But that's not the case. So here's the amount of tax that SARS is able to collect over the same period. And as you can see, it's significantly above the national gross domestic product growth, which only means one thing, is that SARS is able to extract more taxes, be better at their job in a stagnant economy. And the bad news is it's not going to get any better. There's a lot in the media about how SARS is going after taxpayers. In the budget speech of last year, the Minister of Finance announced that he will be providing SARS with 7.5 billion rand additional budget allocation for SARS to improve their capacity to collect more tax. Of course, that's in the wake of the government being unable to secure that 2% VAT increase in 2025, if you remember correctly. So government is instead giving SARS 7.5 billion rand over the medium term to employ better technology. So this also includes that SARS has appointed 1,500 additional tax collectors. So not only does SARS now have more people, they also have better technology, including artificial intelligence. So they're doing the job quicker with more people. And there's only one place that that pressure release valve is let go, and that's in your office as the tax practitioner, and of course of your tax clients. And we know, because we speak to a lot of tax practitioners, is that the pressure on tax audits and verifications is definitely on the increase in your practice. So tax risk insurance offers a solution to some of these products, and these are some of these problems. These are some of the benefits of the product. It removes the uncertainty of an unexpected SARS audit or related dispute, so that when this happens to your client, it's almost always a surprise. Why is this happening to me? I'm an honest taxpayer. We've done all the work that we were supposed to do, but still we're getting this attack from SARS, and in many instances, it's unfair. So we try to remove that uncertainty. The premiums are affordable. We'll have a look at it now. The premium starts at 265 Rand a month for the smaller companies, and larger companies, of course, will pay more. Cover is retrospective, and there are no waiting periods. So if you take your policy today, and 2 weeks down the line, SARS issues you a notice of an audit or raises a reassessment in lieu of your tax returns of 5 years ago, for example, you have cover. So cover is retrospective. There's only one item here that I need to discuss, is that if you already have a problem, so if there's already a dispute with SARS on the go, you can't take out the policy and then expect the policy to help you with that. So you can't have the car accident and then take out the insurance policy, right? That's not how the insurance policy works. However, we'll chat a little bit about the verification and how we are intending to help you when that happens to your clients, when the verification starts arriving through your door. Some of South Africa's best tax specialists are appointed to defend your claims. So the likes of Dr. Erasmus and his team of tax attorneys will be at your disposal. Your own fees are covered for the duration of the claim. So if there's this dispute, and some of them we know becomes quite long, and we also know from experience that many tax practitioners have to write the fees off because the clients can't afford to pay them, or you offer reduced fees. If your clients are covered, then your own fees are covered for the duration of the claims. So not only do we pay external providers, we also include you as part of that team. So it's peace of mind when you need it most. So those are a summary of the benefits. The application process is very simple. It's a one-pager. That's what the application form looks like. It's the same application form. Doesn't matter if you're a company, an individual, or a trust. The application form asks that you indicate on it which category of taxpayer you are. Importantly, each taxpayer gets their own policy. So if your client has a group of companies and there's 4 or 5 taxpayers in that group, then each of those taxpayers then buy their own cover. The application form also then have the rates and indemnity limits on it. It's on the last page of the application form. So you would already know what your client is paying, and you will zoom in on that shortly. And then also the first page of the application form is a summary of the cover. So you don't need to memorize what the cover is. We give you a summary of what's covered and what's not covered and how it works in a simple one-pager. We also offer comprehensive product training from our website. So you can go to our website and there's product training modules there. We often host online training sessions, and you're welcome to join us on one of those. We'll give you more information on that. Just as far as the verification is concerned. Now, as I said, that the policy does not cover you if you already have a problem coming into the policy. So if you're already in the middle of a dispute and you buy the cover, we will ask you to sort that out at your own accord, and then we will bring that back into the cover. We also mentioned that verifications in its own right is not covered, right? So it's all part of your normal tax-paying obligations. But what we will do, if your client is subject to a verification, and as Dr. Erasmus now illustrated, that puts your client at significant increased risk, right? So on the application form, we ask you that question is there currently an issue on the go? And we expect the client then to honor that truthfully. So if your client is already subject to a verification, so it hasn't turned into an audit yet, it hasn't turned into a reassessment which needs to be disputed, you slap bang in the middle of a verification, you can still buy the policy. And what the policy will now do is we will provide you, through Dr. Erasmus, some tools which you can offer to your client in this verification to ensure that when it turns into something else, when it turns into an actual assessment or an audit, that your client's rights are already protected. So on the application form, you indicate to me in the space, because there's space provided for it, that you're already in this verification. We will receive that application form as normal, and then we will provide you with this basic toolkit, which you can then send on to SARS. You prepare your client, and it puts your client in a very powerful position for when it becomes a problem later on, that we are able to defend them. Your client's rights are already established. We've seen in our claims, how you start a fight is often how you end a fight. So it's very important that when your client's already in this verification process, or you've received this notice of a verification, is get your client to buy the cover, so that we are able to give you some tools at that point in time, and to prepare your client for in the event. And we hope it doesn't turn out that way, but realistically speaking, we know that your clients are at increased risk that there is going to be a problem down the line. If there's no problem, that's perfect. Your client still has the cover, and the cover will go on as usual. But if it does turn into an issue, then we do have the cover in place as normal. We will provide your client with a defense. So it's a very useful tool for you to speak to your client when they have a verification and say, don't worry, Mr. Client, there's a solution for you. Let's deal with it in that fashion. Right. So here's the rates, just a summary. So as I said, on the application form, the rates are already there for companies, individuals, and trusts. This is basically what the rate chart looks like. So if you're a small company, you pay 265 Rand a month. The indemnity limits are listed on the right-hand side. I'm not going to discuss with you because we have limited time. So we look at your company's annual turnover in the last financial year, and that's how we determine what the rate is. And that's why we determine what your client's indemnity limit is under the policy. For individuals, same sort of scenario, but here we look at your client's annual taxable income in the last tax year, and that then determines his premium, and that then determines his indemnity limits. So as I said, that's all on the application form, so you have an easy reference point for that. For more information, so that's the contact details. You give me a shout. You're welcome to give me a phone call on my cell phone. It's probably easiest to get me on because I travel quite a bit. Or you send me an email. There's my email address. But most of the information you will need to advise your clients is available at taxrisk.co.za. Importantly, you as a tax practitioner, you can't give insurance advice. You can't sell insurance because you're not an authorized financial services provider. So in all instances, we will team you up with an insurance broker who will take care of that. But you are still the most important person because you give your clients tax advice. And to tell your client that he's exposed to a risk and that he can buy insurance policy as part of tax advice. It is not necessarily insurance advice, but your insurance broker will then execute the sale, receive the application form. If you already have a person that insurance broker that you trust, you can introduce them to us and we'll establish a relationship with them. If you don't have an existing broker, we will introduce you to one of our insurance brokers. We have a national network of around 120 brokers, so we are able to reach far and wide to service your tax risk insurance needs. So you also just give me a call and we'll set you up for that. Right, so that's the end of my presentation. We probably don't have more time, Daniel, for more questions. And maybe we just look at some of the future events taking place, if that's okay with you. Sorry, it just seems like, right, here we go. So I'd like you to save the date. Our next session will be on 19th May 2026 at 10 o'clock in the morning. We'll let you know what the theme of that event is. We'll pick one that's current, fairly similar to this subject matter because it's important to tax practitioners. We'd like to bring you content about what's useful to you. So watch out for the email invitation, and then you can register as you did now for this event. Secondly, I'll introduce Byron Watt from Greatsoft to you. They have an upcoming session on the 14th of May. Byron, are you still around? Can you talk a little bit to this item?
Willem, yes, thanks very much, and good afternoon, everyone. So Greatsoft is having a roadshow on their product offerings. It's taking place on the 14th of May at the Premier Hotel. So if you are interested, please scan in the QR code at the bottom right of the slide, And if you want any further information, on the bottom left of the slide is the marketing@greatsoft.co.za email address. So thank you, Willem, and back over to you.
Thank you, Byron. Yes, by all means, attend that session. It will be useful for you. It's offered by GreatSoft, which is, of course, the platform that we used this morning. The only thing that's left to be said is look out for an email from me soon. If you have any additional questions that we have not been able to deal with during the course of the day, please ask those questions via email. I'll pass them on to Daniel where required. Or if you have questions about the insurance policy itself, I will most definitely help you on that. So the only thing that's left is for me to say thank you very much to Daniel Erasmus for a most informative session. Thank you to you all for attending to us, attending the session, and we hope you found use of it. Thank you very much, and good luck. Thank you.
Thanks, everybody. Thanks for your attendance. Appreciate it.